Hi, I'm Keon, a research analyst with Lipper, and I'm here to speak to you about fund flow activity for the week ended Wednesday, July 8th. During this week, we saw aggregate net inflows of $36.2 billion. This aggregated data includes both mutual funds and ETFs. All of our macro groups except for muni bond funds took in money last week. Leading the way was money markets, which had net inflows of $19.2 billion, followed by equity funds at $14.1 and taxable bond funds at $3.1 billion. Muni bond funds saw about $300 million leave their coffers. Let's take a quick look at last week's market activity. Both the S&P 500 and the Dow Jones Industrial Average suffered significant losses for the second consecutive week. For the week, the S&P was off 1.5% and the Dow was down 1.4%, which brought the two-week totals to 2.9% and 2.5% losses. Similar to last week, both of the indices suffered the majority of the losses on one trading day. But unique to this week was the fact that it wasn't just Greece that was causing the problems. The market also had concerns with the bad news out of China, as well as a trading halt on the NYSE. Let's turn our attention now back to fund flow activity. Last week, for our macro mutual fund groups, we saw equity mutual funds took in $2.6 billion. Taxable bond funds took in about $800 million. Muni bond funds had net outflows of approximately $280 million, and the money market funds took in about $19.2 billion. Let's take a closer look at our equity funds now. The $2.6 billion in net inflows came on the heels of $2.4 billion in net outflows from the previous week. This week's activity, once again, non-domestic equity funds was a major player. They led the way with net inflows of $2.4 billion, while domestic equity funds chipped in about $200 million. For non-domestic equity, we see the largest inflows going to international large cap growth funds, took in about $750 million, and emerging market funds grew their coffers by approximately $650 million. On the U.S. side, we saw large cap core funds leading the way with net inflows of roughly $280 million. Let's take a look at the ETF side of equities now. Last week, equity ETFs saw net inflows of $11.6 billion. This came on the heels of the previous week, where they saw about $8.5 billion leave their coffers. Major players on the buy side last week was the SPDR S&P 500 ETF, which had net inflows of roughly $6.6 billion after seeing approximately $6 billion leave the week before. And also last week, the Financial Select Sector SPDR Fund took in about $2 billion in net new money. On the sell side, we see the iShares MSCI Emerging Markets ETF had about $990 million leave their coffers. Let's take a closer look at taxable bond funds now, starting off with mutual funds. For the week, they had about $757 million in net inflows. This follows a week when they saw $2.8 billion leave their coffers. The major players on the buy side last week were core plus bond funds and core bond funds, which took in $231 million and $162 million respectively in net new money. High yield bond funds again led the way in outflows. Last week, they saw about $261 million leave. This comes on the heels of the previous week where they had $1.3 billion leave. Let's switch over to the ETF side of taxable bonds now. Last week, taxable bond ETFs took in $2.4 billion in net new money. This came on the heels of a week where they saw almost $2 billion in net outflows. The major contributors to the net inflows last week were the iShares 1 to 3 year Treasury bond ETF, which had about $994 million in net new money come in, followed by the iShares Core US Ag, which took in about $330 million. Leading the way for the net outflows was the iShares iBox High Yield Corporate product, which had about $190 million leave their coffers. Let's turn our attention now to the muni bond funds. They had outflows for the 10th consecutive week last week, as they had almost $300 million leave their coffers. Similar to the previous week, high yield muni funds was a major contributor to the net outflows last week. Last week they saw $40 million leave. This comes on the heels of the week before where they had almost $500 million leave. Let's turn our attention now to our last group, money market funds. The group took in $19.2 billion last week. This reduced their year-to-date net outflows to $97.5 billion. The major contributors to last week's net inflows were institutional money markets, which took in $12.1 billion in net new money. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please join us at our website at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking to you about that week's fund flows activity.